Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 16th of March, comes to you from London. And Monday morning's always a very busy morning for me. I start looking at energy markets for clients before 7 a.m. and watching the market open and then writing the report to clients. And I'm looking at all the values on my screen, all the different trends, the support levels, the resistance levels. These columns all read off the charts. And then I do the same on a Monday now for soft commodities as well. So you're just reading off all the different trends again for soft commodities. And of course, then I'm writing the reports. So I write the morning call for clients. You can see this morning calling crude oil higher, gas higher, and we've got these upside targets in the reports. That's produced from the report writer and updater. Is really straightforward and just updates all the charts. So that's the first sort of thing on my list in the mornings on a Monday. And then, as I say, the soft commodities report is a new report that I write for clients where I cover the week ahead. So by the time I've done that, then I get to look at the charts. So here we are. So crude oil still looking bullish. We activated a very big upside target on Thursday with that move to a new closing high. That was really significant. We've covered that in previous charts today, last week. But the interesting thing is now we're starting to see other impacts into other markets. So dollar strength, we're seeing a move to dollar strength. We're above the cloud now on the medium term chart. The weekly chart was bottoming lower, but now we're starting to see a fight back, and we're above 100 on the dollar index and trending higher. So we are seeing moves there, and that means, of course, we're seeing euro weakness. That's rolling over now, so that target is now looking unlikely, and this is really how you start to discount a target. And using the optimized stops is key as well. But we're seeing now that that's euro weakness. That potentially, of course, is inflationary. We are seeing UK stocks reacting quite well because a lot of UK stocks earn their income in dollars. So that's a sort of well-known relationship for the UK majors. So that's also quite key. But looking at the real sort of threats to what's happening, it's in the bond markets. And we're seeing bond yields rising. The US bond market is pulling back a little bit, but in Europe, and we're pulling back a little bit this morning in the UK, but we've activated a big upside target to 5.56%. We're sitting currently at 4.8%. The Bank of England reporting on interest rates this week. What was weeks ago looking like a cut is now looking like a hold, and fear that we'll actually see rates rise rather than fall. So that's the inflationary effect of higher oil prices. And we're looking in Germany, we're seeing bond yields. We activated a new target last week, 3 buying thrusts leading to bond yields much higher. So that is the effect. Italy, very indebted bond market. We're seeing again upside targets here, and the Aussie market. We are seeing here upside targets. That's just we've just seen a new upside target activated. So inflation affecting Australia very big. Being Australian myself, I know that the cost of transportation, because it's a very big country, it's very susceptible to oil prices in that regard, and we are seeing the inflationary effect. And having spent the winter in Australia, I can tell you that inflation is pretty rampant there. We're seeing, therefore, the Australian dollar is looking stronger. We're about to activate a new upside target. 76 was the target there. You go to the shorter term chart, you see it's a little bit more of a mixed picture, but the trend is higher. So it just does mean that we might fall before we rise because of that dollar strength. But again, spare a thought for some of these other economies like India. It now costs over 92 rupees to buy The US dollar was 87 just 6 months ago. Just shows you how the inflationary effect is going to be there. And of course, if you look at their bond yields, that's a bond yield of 7.4% if we break higher there on that target. So really very significant effects, lasting effects from the oil price rise. Now, looking at stock markets, you'd think that they would be plummeting, but they're not. We are rolling over on the S&P 500. We did close below the cloud for the very first time on the future last week. So we are rolling over. First time below the cloud really for since April last year. It's nearly 12 months. The Nasdaq actually was hit harder, has activated that downside target. So that was the key. On Friday, we've activated a downside target. So tech stocks looking set to fall even further. As I mentioned, the UK market holding up relatively well, primarily because UK stocks do take in a lot of dollars, so a stronger dollar has a positive impact there. But we saw in Asia stocks lower generally as well. Taking a look at the Dow, we're seeing here quite a mixed picture. A lot of stocks down, and even stocks that have been breaking to new highs like Walmart. Now we're waiting to see if we activate this downside target. Lower high, lower low. That's the Dow theory, activating the target. And if you've looked at my free resources on the Updater website, the LSEG free resources, I cover all of this, so you can go and watch that. And of course, if you're running the targets, you can be running them on TradingView. You can literally be running the targets here any which way you want. So that's where a lot of people are using the targets now. And of course, if you're an institutional user, you'll be using them on Bloomberg. I know a lot of energy traders are using them there as well. And so then looking at the NASDAQ, Adobe, what a disastrous chart this has been. You can see here we are down, breaking to new lows. This is the risk in downtrends. This is the key thing, is recoveries can take a very long time. Calling the bottom is dangerous. And if we look at the 60-minute chart, you can see we had upside, downside, a very mixed picture, but really lower there. And if we look at the other end of the spectrum, Micron, this is a really interesting situation. This has been a real star performer. We did actually have a downside orange target that wasn't activated. We've got a new upside target. Will we go and make a new high? So not all tech is falling, but then again, if you go to the 60-minute chart, you can see it's a very mixed picture. So you've got to really look at those charts. And also, by the way, playing with the targets. So I use we have these keys now where you can actually move the targets to fit the chart, and so you can see there. That's the picture for Micron, and it's quite key there that we've got these targets waiting to see if we activate that upside target, and of course breaking to a new high would be strong. Now looking at the FTSE, we've got just over a minute left. Today's moves really quite significant. If we look at Tesco is the strongest player there, but we look at, this was one I was looking at earlier that was top of the list. Now, interesting chart there. This is Fresnillo, basically lower high, lower low, activating a downside target. So this is, again, something you want to watch my free resources for. We're seeing quite a lot of stocks down, Rolls-Royce. So there are quite a lot of stocks giving downside targets. So that's quite key. EasyJet, even though they're not flying to the Middle East, airlines are affected primarily because their main input cost is fuel. And so higher oil price, hopefully they're hedged, but even so, that is going to really stress margins. Seeing Tesco up this morning 3%, so that's at one point there. We're waiting to see if we activate that upside target, so that's quite key. BP, another strong performer, of course, breaking to new highs, so really quite key there as well. And look at all those upside targets on the short-term chart. That's it for today. Until tomorrow, Happy charting. Bye for now.